Hey, what's up everybody? It's the People's Crypto. I'm back again with another video. In this video, I'm going to be discussing the similarities and the differences between the cryptocurrency space and the stock market. So let's jump right into it. So the cryptocurrency space, the cryptocurrency exchanges are open 24/7 for the whole year, including Christmas. On the other hand, you have the stock market. The stock market's closed. The exchanges where you can trade financial instruments are not open during the weekend and normally close in the afternoon around 5 p.m. The exact time dependent upon in which country the relevant exchange is based in. Here in the States, our exchanges are open from 9 a.m. to 4 p.m. If you're in another country, your stock market may actually open at a different time, or it really depends on where you're geographically located. The cryptocurrency space, anyone can make their own blockchain ledger. Many long-time digital currencies such as Dogecoin were actually made by a group of board programmers. You also have Bitcoin, which was made by Satoshi Nakamoto, which is a pseudonym. We don't know if that's an individual or a group of programmers, but in the cryptocurrency space, essentially anyone could make their own blockchain or their own cryptocurrency. Compare that to stocks. When stocks are created, they have to be cleared by government agencies and audited. They also have to adhere to certain regulations before they can even hit the market. The cryptocurrency space, the crypto market is unpredictable and prone to sudden currency crashes in terms of investing behavior. This leads to one of the most striking differences between cryptocurrencies and stocks. I'm gonna somewhat have to disagree with that a little bit. I would say that the cryptocurrency market is unpredictable, but so is the stock market. If you look at the stock market currently, we're up during a pandemic, and there's riots, looting, and there's massive unemployment in the United States. So it makes no sense that the stock market doesn't really react to that news like how it used to in the past. If any of these things happen, that usually did bring the market down, and it did a couple weeks ago, but however, we've rebounded, but nothing has improved or changed as of yet, and we're currently going through a reopening phase here in the States, so it doesn't really make any sense. So I would also say the stock market is also unpredictable as well, as it pertains to the sudden currency crashes that's listed on this side of the cryptocurrency space Venn diagram. I would say that's kind of true, but it depends. For example, if you invest in Bitcoin, we do see a lot of volatility. Bitcoin could go anywhere from $9,000 to about $8,000 or $7,000 in just a matter of minutes or seconds. But the stock market can also do that too if there's like a crash and no one's really anticipating a crash occurring, because you can't really predict what's going to happen in either market. So I would kind of say that could kind of be grouped in this similarity section. But I mean, I guess it is unpredictable, but stocks are also unpredictable as well. Let's see, the stock market, stock investors tend to hold their stocks during times of volatility, knowing that things eventually smooth out. Because crypto is widely unpredictable as it is, it's not always wise to hodl, which is hold on for dear life. I'm gonna kind of agree with that to a certain extent. I would say that in both instances, if you have cryptos and you have stocks, ideally it's good to take some profits, especially if you're up, because you never know when a correction could happen or if a crash could happen. So I would say it's just a good idea to have an exit strategy, whether that's if you're investing in Bitcoin or if you're invested in a particular stock. Let's say you're invested in Apple or Amazon. It's good to take some profit off of the top. You don't have to sell the entire crypto or stock. You could just take some profits. All right, so let's look at the cryptocurrency space. Cryptocurrency, though, is different. It's literally digital currency, and it's very hackable. Moreover, it doesn't show your name tied to anything of it, or any of it, excuse me. because of the nature of digital currency, it's easier to steal and hack. I'm going to have to agree and also disagree with this because it depends on which cryptocurrency you're invested in. Some cryptocurrencies are very easy to hack. That's if they're, we have a term for it. It's called SHIT coins. If you're invested in some of those, and I would say if they're like not in the top 50 and they're like in the top, no, I wouldn't even say if they're like in the bottom 200, or if they're like, I wouldn't even say bottom 200. If it's like the 400th coin out of the 5,000 cryptocurrencies that we have, then there's a very good chance that that coin can probably get hacked. So it depends on which coin you're invested in, because Bitcoin has actually never gotten hacked. However, some exchanges, however, have gotten hacked. So I would say that's kind of like partially incorrect. So I would say exchanges are actually more prone to the hacks. If you're invested in a SHIT coin, yeah, those can get hacked. Let's look at the stock side. It says stocks are heavily regulated and most have to go through yearly audits in order to continue to be traded on the stock market. Because of the heavy scrutiny that comes with making your own stock, it's highly unlikely that the stocks you invest in will be fraudulent. I'm gonna also have to kind of like agree and disagree with that. That's somewhat true. If you invest in penny stocks, those are kind of like not heavily regulated. Those can be listed on the pink sheets. So those don't necessarily have to be heavily regulated. There's not really too much guidance for audits for penny stocks. So I would say stay away from the penny stocks unless you're day trading them. But I guess that is somewhat true. But it's not true if you're a penny stock trader or investor. All right, so let's look at some of the similarities between the two. All right, so both of them can be valued based on the ideas behind them. Both of them are so far valued in fiat currencies. So yeah, cryptocurrencies is based in dollars and stocks is also based in dollars. Both require fiat currencies to make the initial investment, which is true. Both can significantly increase or decrease the investor's net worth, which is extremely true. And last but not least, both markets suffer from manipulation by high net worth individuals or institutions, financial institutions, that is. So I would also say probably one of the benefits of cryptocurrencies versus the stock market is that the greater the risk, the greater reward. So if you're invested in cryptocurrencies, you can actually 1,000x depending on which cryptocurrencies you're invested in. If you're in it for the long haul, that is. The stock market, the gains are present. However, you'd have to hold on for anywhere. You would also have to hold on for the long term, but I would say ideally you would probably have to hold on to those stocks for decades. In the cryptocurrency space, you can realize some gains maybe in like 4 to 5 years. The stock market is more like, I would say you'd have to hold on for some decades to actually see some really crazy gains. But the gains that you'd make in the stock market are nothing compared to what the gains you'll make in the cryptocurrency space, especially if you pick some excellent cryptos. So it all depends on where you invest your money. And I think that's actually going to wrap it up for this particular video. If you're watching this video on YouTube, please do not forget to like and subscribe, and please leave a comment. If you're listening to this on Library, please share it, and please also leave me a comment. That's actually going to do it for this video. I will see you guys later. Enjoy the rest of your weekend. See ya.